Ladies and gentlemen, what's going on? My name is John, I got options, and today we have to talk about the Situational Awareness Fund and their recent liquidation of all their public positions. This story, this is a movie. Somebody needs to come out and make a movie about this entire situation because it is absolutely insane. So in this video, I'm going to break down everything that I've learned so far about what's going on and why I think this may be a massive buying opportunity in the market, because this liquidation of situational awareness and their public positions could be marking a turning point in the market. This could be the bottom for AI stocks, for high growth semiconductors, NVIDIA, Broadcom, Marvell, Lumentum, all these companies that we've been talking about recently. So to begin with, Leopold Aschenbrenner, the creator of Situational Awareness Fund, started with roughly $225 million, and he blew that up to $46 billion, and now it's gone. Essentially gone, because he just got liquidated for his public positions. Now, when I say public positions, I mean his positions in Nebius, CoreWeave, Core Scientific, NVIDIA, Broadcom, all these positions he owned, everything we've been talking about, everything you've seen online on X and all of that, he got liquidated. And guess who bought the positions? No other than our boy Ken Griffin from Citadel. And you know what's even more interesting is that Citadel on Monday, just a few days ago, before this happened, came out and their head of macro strategy said, you know what, we think the Fed's going to raise the rates on Wednesday. So Monday, Citadel says they're going to raise the rates on Wednesday. When I heard that news, I said, oh, this guy's got something up his sleeve, because we all know they're not raising the rates. But somehow, some reason, this hedge fund, giant hedge fund, is saying they're going to raise the rates. I instantly knew, I said, oh, Ken Griffin's up to something. There's more to this. He's trying to push the market down. I don't know why, but he is. I said that to myself. And here we are, a few days later, he block order buys a majority of the positions from Situational Awareness Fund because they were being margin called. So, quick lesson on margin to explain that. Margin is very dangerous. Do not use margin if you do not know what you're doing. And even if you do know what you're doing and you do know what margin is, you probably still should not use margin because it's that dangerous. And what margin is essentially is, let's say you have an account and you have $10,000, your money in the account. Let's say you bought NVIDIA, and let's say over 2 years, NVIDIA shoots up, and now you have $100,000 in your account. You're like, man, this is great. And now you click on the thing, it says margin. And you're like, wait a minute, margin? What's that? I can go on margin? Oh, so they'll give me money? They will literally give you buying power in your account that you can then use to go buy more NVIDIA or other AI stocks or whatever you want. And so now that your account's at 100,000, you say, I could get $100,000 margin. They'll match my account. So if you go and you grab, let's say $100,000 margin, your account's worth $100,000. Now you have $200,000 of buying power in your account. You take that $100,000, you go buy NVIDIA again. But now it's already 10x, remember. And then let's say NVIDIA goes down 10%. You're going to get what's called a margin call because your account is fully levered. You are one-to-one levered in your account. You had $100,000 and you took a $100,000 margin. Now, when NVIDIA goes down 10%, you are going to be in margin call and you are going to have to either fund your account with more money or start selling NVIDIA to pay back that margin, because the margin available will shrink to a number that you don't have in your account currently. So you're in a margin call. Now, picture that, but with $45 billion. Essentially, that's what happened with Leopold's fund, Situational Awareness. So he started with $225 million, blew it up to $20 billion. Next thing you know, now he's at $45 billion in the fund. This guy must have had crazy margin. He was buying options, and then he was buying puts. He was shorting some of these same AI stocks that he was long, which I thought was really interesting. And I was like, maybe he thinks the market's going to go down. Like, this is kind of odd, but maybe he's just trying to hedge his portfolio a little bit. No, turns out he was probably anticipating and planning for, man, what if the market comes down? I'm going to need these puts to offset. Well, that is a dangerous, dangerous game, because you never know whether the put you're buying is at the right expiration date, whether it's too deep in the money, too far out of the money. It's extremely hard, nearly impossible task to perfectly hedge your portfolio in that way, because at the same time, as the stocks continue to go up, you're losing money on your shorts, on all the puts you're buying. Anyways, the point is that the guy got margin called. And you have two options then. Like I said, you can either go raise more money, or you can start selling off positions to cover the margin call. Now, as the market started going down, I assume that he started selling some of these positions to cover his margin. And that also is pushing down the market because he has such a high position in these same companies. So, for example, according to ChatGPT, at one point, Leopold's fund had, starting with Nebius, he had around a 5.6% ownership of Nebius. So he owned literally 5% of the entire company. So when he goes and starts hitting that sell button on Nebius, the stock is instantly dropping because he's filling so many orders on the order book. That is putting so much selling pressure because the buyers aren't lined up ready to go, especially when the market is already in a downturn. He's pushing the stock down insanely fast, which is then further hurting the fact that he's in a margin call. Another stock, Bloom Energy, 3 to 5% of the entire company was owned by Situational Awareness. Another one, CoreWeave, 1 to 3%. Now, 1% doesn't sound like much, but you have to understand, 1%, and when you go to start selling, that is a huge amount when you look at the order book and what's actually available for sale and where buyers have their bids at. Another one, SanDisk, less than 1%, IREN, 2 to 4%, Core Scientific, 1 to 3%, Applied Digital, likely several percent, Riot, low single digits, Deere, low single digits, Clean Spark, low single digits, Hive, small, Sharon AI, small position. He owned so much of these businesses that when he went to sell, he was just absolutely annihilating the bids. He was absolutely gobbling those up and just destroying the market. And this is why I'm saying that this might be the bottom, because this forced seller in the market is now gone. You no longer have this forced seller due to his margin calls in the market pushing all these companies down. So now why I say this is a movie is because when you look at the entire arc of this guy, Leopold Aschenbrenner, it's a movie. And when you look at Ken Griffin, it's a movie. And when you look at what Ken Griffin did on Monday by having his fund come out and say, we think there's going to be rate hikes. And I'm sitting there thinking, rate hikes? We're not going to have rate hikes on Wednesday. He was one of the few hedge funds. That's what my chat GPT told me. He was one of the few hedge funds to actually come out and say, yeah, there's going to be rate hikes on Wednesday. There's no reason why he would come out and say that. It doesn't make any sense. But now, when you add it up, what was he most likely doing? This is all hypothetical. I don't know. Not for certain. Just my thoughts. Just my hypothesis is that maybe he got a call. He's up there in New York, with the boys on Wall Street, and he gets a call from one of the banks saying, man, that guy Leopold, right, with situational awareness, dude, he's not looking too good. We just put a margin call on him, dude. He owes us like a couple $1 billion. He's gonna be in margin call. And Ken's probably over there like, oh, you don't say. Really? Interesting. So what does he do Monday? Boom, come out. Oh, there's going to be rate hikes. What does that do? That pushes the market down even more. So what does that do to Leopold? That hurts him even more. He has to sell even more. So he got to a position where he's like, all right, I got two options here. I can either just continue dumping everything, but as I'm selling, I'm having to sell at lower and lower prices. I can't raise money. Nobody wants to give me more money, so I can't cover the margin call that way. Or what I can do is talk to these hedge funds and do a block order sale in what they call like the dark pools, where you are selling your positions directly to another entity. It's not going on the open market for sale. So what that does is you are not destroying the order books in a sense by putting your orders out on the open market. You're just shifting, all right, I got 10 million shares of whatever, IREN, I'm going to shift that over. You're going to buy my 10 million shares. And usually these sales happen at a price that's less than what the market's going for. So if, let's say IREN's at $40, he might go sell it at 32 to Ken Griffin. This is all hypothetical. I don't know if this is what happened, but what did happen is that Leopold had to sell and Citadel happened to be the buyer, and Citadel also happened on Monday to say that they think there's going to be rate hikes on Wednesday, which usually if people hear rate hikes, they think, oh, the market's going to go down. So that probably would make people at least want to sell if they sell. That, just my thoughts here. And so he puts an order book out. He says, all right, I'm going to sell directly to you off the market, get these positions off my hands, give all the money back to the banks, whoever I owe all this margin to. And now what's also interesting about Leopold is his fiance works as the chief of staff over at Anthropic. So that leaves me to believe, hypothetically, I don't know, not for certain, is that maybe he had some insider information and maybe that's why he did so well with situational awareness. I'm just saying, these are just my thoughts. Leopold also apparently worked at FTX and resigned the same day that FTX went bankrupt. So, these are some interesting characters we're dealing with here. And Ken Griffin is an interesting character we're dealing with. This is just absolute cutthroat activity that we're seeing in the market. And we're just all here with our little portfolios like, oh my gosh, the market's going down. Meanwhile, these guys are dealing with $45 billion margin calls. This is crazy stuff. So I just thought all of this was absolutely fascinating and interesting. And you could literally make a movie out of this. Like, this is movie worthy. This is Hollywood worthy. Someone should make an AI movie, make the first real AI movie about Situational Awareness Fund and about Citadel buying them out. And this is great. This is crazy. So I just want to share that with you guys. And I think that this is a buying opportunity, not financial advice. Do your own research, make your own decisions. I'm not responsible for any financial decisions that you make. Now, what I'm going to be doing with my money is I will be buying this dip because now I am even more bullish because these are great companies that Situational Awareness was buying. These are great businesses that are growing, that have great revenue. AI is only going to be more and more and more, whether it's open source AI, whether it's Anthropic, whether it's OpenAI. Guess what? They all need massive amounts of compute. And guess what? We don't have enough compute. We don't have enough energy. We don't have enough power. We don't have enough data centers. So we got SpaceX going to be doing orbital data centers. You got Nebius that's going to be selling compute with the neo clouds. You got Oracle. You got Amazon. You got Google just came out with crazy earnings. The amount of money that these hyperscalers are putting into compute and CapEx for AI is absolutely insane. This is not going to stop. The fundamentals for these chip companies, for the semiconductors, for these AI companies, it's only going to keep going and it's only going to keep booming. What we are seeing right now, in my opinion, is a forced liquidation situation with Situational Awareness Fund. And this has caused the market to go down. But this is all temporary. In the long term, if you buy great companies that compound their revenue and grow their earnings and grow their net income and grow their cash flow, grow their operating cash flow, free cash flow, all the numbers going up and to the right, that's what's important, you are going to do well. But do not be on margin because you'll end up like our boy Leopold Aschenbrenner. And you don't want to end up like Leopold. You don't want to see your money go from $225 million and go to $45 billion and get liquidated. You don't want that to happen. So, my name is John. I got options. Make sure you check out feedmetrades.com where you can track all of your option trades, your covered calls, your selling puts, call debit spreads. That's what I got for you guys. So, stay healthy, stay wealthy, and stay tuned for the next one. And don't get margin called. Peace.